Test, mic test. It was good, was good. Yeah, it's been a while. I dropped a video on YouTube because, yeah. So we'll be going over this EU trade on Wednesday. This was on Wednesday on the 5th, but it was posted on the 6th, my time. So we'll go over this trade, this gold trade, and also this EU trade. I believe this was EU, yeah, I can recall this. This was EU, same EU, same EU. And then this gold trade of today, of just like 4 hours ago. So we'll go over them. So let's start with EU. You can also check out previous videos. You can check my YouTube and you can see previous videos. All the concepts is all the same. Like everything is out there. There's nothing hidden, like no sugar coating, just straight to the point. So let me just load up my EU charts on the 1 hour. So basically we have this, like, so what my thought process behind this trade? We have price midnight opening and trading up and price taking out this high, and this time is 10 a.m. We normally tend to have there's what is called London close trade, in which if price have been trading in a particular direction, once it's 10 a.m. you can expect some sort of reversal. So, and this was happening at the key area. Price was taking out this high. So, like seeing this, like price taking out this high, I zoomed it on the 15-minute time frame. And after zooming to the 15-minute time frame, you can see that there's also a mini CRT confirmation here. So instead of waiting for 11 o'clock, that is for the 1 hour candle to close, you can use this 15 minutes and you can go to the 3 minutes. This is like just based on what I do. So what I'm explaining is like based on what I did. You can go to the 3 minutes and wait for some sort of break, and you can get your entry earlier on than waiting for the 1 hour time frame. So that is how you can get trades from the second candle itself. That is the before that candle closes, the manipulation candle. You can zoom into that candle, look at the 15 minutes, find some sort of 15-minute CRT, because the candles I use are 4 hour, 1 hour, 15 minutes, then 3 minutes for entry, always 3 minutes for entry. Then 15 minutes after this, you can see price broke down here. Price broke down here. So this can be your entry with your stop loss just above the high. So my stop loss was above the high. The stop loss might be large, but then the move still, we look at, we have like a 3 to 1. So that was just this. Basically my entry was from here. Let me go to the 1 hour. Because after see the 15 minutes, I took my entry from here. Let me show them. And basically my target was just this lows here. My entry from here. Stop loss above this high. So I was just targeting these lows here. So that was my target. So that was that for that particular trade on Wednesday EU, just to target the lows. Then price went to TP like the next day. That was when this was posted, like TP leaving partials to run, in which partials were closed later on. Yeah, that's it. Yeah, partials were closed later on. So that is for EU. Then we have for gold. So like a guy from South Africa I met on Twitter, like we basically started talking, and like discussing about like share our strategies and all. So this is just him like pointing out a trade on gold, like a potential CRT formation on gold. So let's just go to the 4 hour on gold. So it was from, okay, yeah, this was the candle I can recall. So on this day, price traded here, reacted and traded to this other block here. So on this here, you can go to the 1 hour. It's just based on a 1 hour um, CRT formation. So we have this high, taking out this high and trading into the other block 7 a.m. So you can zoom into the 15 minute, you can zoom in further. What do we have here? No valid at this extreme high, no valid CRT here. The candle before it does not close below, so the CRT is not valid. So you have to wait for the 1 hour. These are basically my rules. You have to wait for the 1 hour, wait for this candle to close to confirm the CRT, then you find your entry. So zooming into that, this was on Thursday. After the candle's closure, looking at this, the entry was basically from here. After price respected here, price respected this other block and traded below, then my entry was from here. Let's just confirm the entry, which is from here, and my stop loss was just here above this fair value gap, because we have a small fair value gap. So the 50% of the week was basically like, okay, when you mark out the 50% of a week, like you have to look for um PD arrays that are around that area. So looking at the 50% of the week, there's no really any like PD array, no fair value gap, like nothing. And the 50% of the week was like too far. So if gold is like really bearish, it will not need to come back that far. So that was why my stop loss placement was here, just above this fair value gap, because it's very possible for price to retrace and come to the fair value gap and keep going down. That was basically my thought process. And if you look at the conversation we're having, you'll have to wait for some sort of sell structure. 50% of the week is too far, but it's open for possibilities. So the stop loss was just above this fair value gap. And looking at this, price traded to the fair value gap here. If you look at this candle, it just taps the fair value gap and reacted from there. So price tapping that fair value gap and reacting from there gave me an opportunity to get another entry here. So I was able to get another entry here, but this time my stop loss just above this fair value gap a little bit, with a lower lot size, because based on management you already entered here, so you reduce your lot size for this instead of increasing your lot size. So that explains this entry here. Then after tapping to the fair value gap, that explains this entry. The partials were taken here, partials were taken here also. So partials were basically taken here below these lows here, and partials were taken here also after we took out this low, then before this whole like extra move, which I don't really care about anymore, because I mean I already took majority of the profit at logical levels. That is this low here. So yeah, that was that on gold. So the next day, that was on the 7th, we had EU trade. So EU 1 hour. Let's start from the hour, because it basically started from the 1 hour. Like I didn't even go to the 4 hour. So it basically started from the 1 hour. which is this. I think we had NFP on this day. So what is the thought process behind this trade? The price is basically taking out this low, and this is where the CRT is forming. If you go to the 15 minutes, you can see that there is a small fair value gap here. So this was what I was looking at while taking this trade. There is a small fair value gap here. Price is taking out this low, and we had, okay, last week was NFP. Yeah, we had NFP later on the day. That is what caused all these moves. So price was taking out this low. So my aim was just to take out Asian highs. That is this 7 o'clock highs. That was just my aim, just from here to take out Asian highs. So from the 15-minute time frame, if you notice, I entered earlier than I was supposed to enter because I misread this candle. Looking at this, I was looking at this as this candle's high below this candle's high, and this is a valid 15-minute CRT. So my entry was just basically immediately after we traded above. So let's say I was, not say I was somewhat lucky. I would say a bit, but still it's all the same. So then with this, wait for this candle to close, mark out this candle. If there is no 15-minute, if there is no 15 minutes valid CRT, go back to the 1 hour, mark out, wait for this candle to close, mark out this candle, go to the 3 minutes time frame, and look for some sort of structure breaking to the upside. So my entry was here basically. But if waiting for the 1 hour, you have to look for a trade after this, in which, okay, price is coming back here, price traded up here, price is coming back here. It will not be ideal to enter because price can still keep going down. So you have to wait for some sort of reaction, wait for a break to the upside. Then your probable entry will be around here. You can put your stop loss below here because there's not really any area that price can, retrace to. No fair value gap of some sort, and nothing there that price can retrace to. So that is what I look out for when I'm placing my stop loss. There are some times that my stop loss will be down here if there's a key area that I feel like price can draw deeper into. But here there is nothing that, like, no fair value gap, like nothing that price can draw deep into. So you can put your stop loss just there. Targets this high or this high. This is like a 2.7 to 1. 2.78 to 1. You can also target this high. So all these areas are just key areas of liquidity, taking out this high, and eventually this high before all this. So only this trade alone is like good enough to even just, no need looking for anything else on for NFP. So yeah, that was that on this particular trade. Took partials be above the highs, the first highs, then another partial above Asian high, and that was just, this was just it. I think until price had to come back and stop me at break even. Then yeah, so that was that on Euro USD. So this is basically where the trade started from. Yeah, taking first partials, taking second partial. So this was more like an update. So for today, yeah, because on my Twitter I said I was going to drop an important gem. So if um it's something you need to backtest. If price is an all-time highs or all-time low, and like, because if you look at gold, if you look at gold, you see that gold is at like all-time high, like at the middle of nowhere, and price should open up and start rallying. Like here, price opened up and start rallying. Once it's 10 a.m., you can look for some sort of retracement. This might not be the high of the week or the high of the month or the high of the day, but you can look for some sort of retracement, and based on your confirmation, you can take a trade and target any key area. So basically, that was like basically the same concept we used on EU here. Price started rallying, traded to a key area, 10 a.m. where we got this retracement. But in this case, for gold, price is at all times high, so there's not really any key level that you can point back from the past. But just based on price has been rallying, at least we should expect some sort of retracement. So you can just like catch, if you are that kind of trader, basically, like it's not basically for everyone, you can get this. So that was just like the thought process behind this. And initially I took a loss here, I think, yeah, it was here. Same price taking this high and closing, then then it was on this candle. So I took a loss there. So I just basically waited for 10 a.m. and yeah, no valid one confirmation on the 15 minutes like CRT, because we already took out this low. Because I always look for type for a particular type of CRT candle, that is this type, where price, the three candle type, where price you take out the high, then accumulation, manipulation, then the third candle would like distribute. So basically I just waited for this 1 hour to close, then wait for the 11 a.m. This is where 11 a.m. starts from. Then you can wait for some sort of break before you enter the trade. Actually, stop loss up, because there's nothing really here to reference. Like if price is to come back, there's really nothing. So you can put your stop loss here, stop loss here. Target key levels. We have this fair value gap here. We have this rejection block here. We have this fair value gap here. We have this little gap here. So you can look back in time to target basically key areas. So yeah, this was just it. And basically the loss that I took here, I recouped it using this, and yeah, some extra profits from that. And now my stop loss is here now. So just here, just a bit, because I just put it above this fair value gap here, because the price came here, I reacted from here, but seeing price coming here, it's probably keep going up, and I don't really care about that, because I already and this already played out, which is fine. So I think my stop loss was here, in which it was adjusted to this, just above this fair value gap. After realizing that there's a small fair value gap here, I'll just mark that out. There's a small fair value gap here, in which price can also come back to, which is this. So now my stop loss is just here, and entry is around here. So like the I already took partials, so um the remaining the distance from the entry to the stop loss is just little, because you already took majority of the partials, because it was open with two lots, in which partials of 1.5 has been taken, so you're just left with 0.5. So like even if the stop loss is above, like it does not still take out, like these partials, the stop loss for the partials, even if it's above the overall high, it does not still take out like what has been made from like this move here. So I mean, if price is breaking through this area, I don't really see anything here that price can like go to and keep going down. So yeah, that is that for gold. So you can back test the 10 a.m. like this. We also have the same thing here. The 10 a.m. London close um, reversal. You can back test it. Is something to like watch out for. Like, this 10 a.m. The same thing. Just study this 10 a.m. This 10 a.m. Look at this. This is 10 a.m. Taking out this high. This was, I think this was around 10 a.m. This was on a Friday. I was not even on the chart at this time. So 10 a.m. taking out this high. Like just study the 10 a.m. You will see that like a few times you can get 10 a.m. here. 10 a.m. is the high here. I'm not sure this 10 a.m. This 2 p.m. So yeah, just this 11 a.m. So just study that particular time and blend it with key levels like highs, above highs, above lows, at fair value gaps. It's not really tapping to this, but you can go to the 4 hour and see what is here. Above lows, above highs, like yeah, it's something to that you can. And also feel free to like if you want to put in some study. We had this today. I don't really trade this pair to be honest, but we had this today. CRT high here. Took out price opened up, rallied, took out this high. This was the same thing on EJ. Never look up here. We have this area here, which price is reacting from. So we also had like if you know this it forms everywhere at key areas. We have this here, took out this high. This we had the same thing on GU here, took out this high and traded lower, basically aiming for these lows here. Here's the JPY, same thing. We have it here. Price traded up. We also had even on EJ and GJ, we had like there were buy opportunities from here to take out this high. Then after this price took out this high, later on we came here, we have an opportunity here, which is basically price tapping into this other block here. This is another block. If you go to the higher time from 2 hour, 3 hour, because if you merge these two candles together, it's basically like an other block. So this is forming here. And you can just target Asian low 7 to 12 midnight, Asian high, Asian low. You can just target this low and price go to Asian low. We have this fair value gap here. And we also have CRT forming here also. So I mean like I'm just basically just pointing you to all this so that I can just study it. Because yeah, it's something I'm also studying. So you can just study it and backtest and like yeah. The price taking out this high, happy to this fair value gap. We have this CRT high here. Wait for the candle to close. If no 15 minutes here to wait for it to close, look for your entry from here for some sort of breakdown. Look for your entry from there. So yeah. So that will be all for today, guys. Stay safe. Don't forget to like, subscribe. You can drop a comment on how we can improve the channel and what you want to see, basically. Um, if you have a specific video you want to see, you can just yeah. So this is a link to the channels on my bio on Twitter. I also post on TikTok. So I'm trying to get active on TikTok. Just TikTok, YouTube, Twitter, or not IG. So yeah, we'll have some other videos here that you can just look at and just yeah. So stay safe. We have CPI to is it tomorrow or Wednesday? Uh, we have CPI on Wednesday, so just be safe. Like you can skip this day, to be honest, or you can find something on Tuesday in which you can hold for Wednesday. But yeah, don't force it on Wednesday because it's CPI. Although news is just injection of liquidity, but you can wipe out both sides, which is it's normal for CPI. It's a normal trade for CPI. So yeah, just if you are getting into a trade tomorrow, you can see if you can get something. Let's say 10 a.m. Then you can hold. Maybe CPI will give more volatility to your target and all. So yeah, tomorrow we'll see what we can get basically. So yeah, stay safe. Good luck, good trading, and yeah.